What if the biggest wealth building opportunity of the next few years isn't something most people are even watching? While millions of Americans are focused on stocks, savings accounts, and the next paycheck, wealthy investors are looking at something different. Assets that can grow, produce cash flow, or protect purchasing power over time. And here's the interesting part. Some of these assets aren't complicated. They're already around you. So today, we're breaking down 7 assets millionaires are positioning themselves around before 2030, and why most people are still ignoring them. Real estate and rental property? Think of real estate like a financial machine. You put capital into an income-producing property, tenants potentially generate cash flow, and over time, the underlying property may appreciate. But wealthy investors aren't simply asking, will this house go up? They're asking 4 engineering-style questions. What does it cost? What cash flow does it produce? What risks can break the system? And what happens over 10 years? That's why income-producing real estate remains interesting. The goal isn't just owning a building. It's owning an asset that can potentially produce income while you hold it.
Infrastructure. Most people think infrastructure means roads and bridges, but the investment opportunity is much broader. Think data centers, power systems, digital infrastructure, communication networks, and the physical systems supporting a growing economy. Here's the engineering logic. Technology can scale only as fast as the infrastructure supporting it. AI needs computing power. Computing power needs data centers. Data centers need electricity, and electricity needs infrastructure. That creates a chain reaction. As the digital economy grows toward 2030, investors are watching the infrastructure behind the technology, not just the technology itself.
Energy assets? Here's a simple equation. Economic growth requires energy. Factories need electricity. Data centers need electricity. Electric vehicles need electricity. AI systems need enormous amounts of computing power, and computing power requires energy. That makes energy-related assets particularly interesting for long-term investors. The wealthy aren't necessarily betting on one energy source. They're thinking about the entire system: generation, storage, transmission, and distribution. In engineering terms, they're looking for bottlenecks. And whenever demand grows faster than capacity, the infrastructure solving that bottleneck can become extremely valuable. Gold and other hard assets. Now let's move away from growth and talk about protection. Cash is useful, but cash also has a weakness. Inflation can reduce what that cash can buy over time. That's why some wealthy investors maintain exposure to hard assets, such as gold. The engineering principle is simple. Don't design a system with only one component. In finance, that's diversification. If stocks fall, currencies weaken, or economic uncertainty increases, hard assets can behave differently from traditional financial assets. Gold isn't a magic investment. It doesn't automatically create wealth. But as a portfolio component, it can serve a different job: risk management. Private businesses. Here's something most people overlook. You don't necessarily have to buy a public company's stock to own a piece of a business. Private businesses can be powerful wealth-building assets because they can generate actual operating cash flow. Think specialized services, software companies, healthcare businesses, logistics companies, and local businesses with strong customer demand. The engineering approach is to analyze the business like a machine. Revenue goes in, expenses come out, cash flow is generated. If the machine becomes more efficient and keeps producing cash, the underlying business can become more valuable. That's why wealthy investors often focus heavily on business ownership, not just market prices. AI and technology infrastructure? AI isn't just a software story. Behind every AI model are physical and financial assets: chips, data centers, cloud infrastructure, networking equipment, electricity, and specialized software. Think of AI as a massive economic system,
The visible product may be an AI chatbot, but underneath it is an enormous infrastructure layer. That's where the engineering mindset becomes useful. Instead of asking which AI company will win, ask what resources will almost every AI company need. That shift from betting on one winner to understanding the infrastructure can reveal completely different investment opportunities. Intellectual property and digital assets. The final category is something many people don't think of as an asset: intellectual property. Patents, software, licensing rights, valuable brands, digital products, and proprietary technology can create economic value without requiring a massive physical footprint. Imagine creating something once and being able to license it repeatedly. That's leverage. 1 hour of work doesn't necessarily have to produce 1 hour of income. A valuable piece of intellectual property can potentially generate revenue multiple times. And as the economy becomes increasingly digital, ownership of unique information, technology, and distribution can become increasingly important. The key is simple. Don't just own things that consume money, look for things that can create economic value. Now, here's the bigger picture. These 7 assets aren't 7 guaranteed winners. That's not how investing works. Instead, think of them as 7 different financial engines. Real estate can focus on income and physical ownership. Infrastructure can benefit from growing economic demand. Energy supports almost every modern industry. Gold can provide diversification. Private businesses can generate operating cash flow. AI infrastructure can support technological growth. And intellectual property can create scalable economic value. The engineering mindset isn't about predicting the future perfectly. It's about building a system that can survive different futures.
If this video helped you, hit the like button, share it with someone who's making 6 figures, and subscribe for more practical money and investing tips. Thanks for watching, and I'll see you in the next one.